Boom. We are live, ladies and gentlemen. Great day here in Costa Rica. Thank you all for joining us. Another great live situation here. I like that we can be consistent with this. I hope you enjoy the new backdrop we have behind us as we set up this new little podcast center. We're going to be taking a look at Bitcoin's price and Ethereum and just some kind of market and sentiment analysis. So we're going to focus on that to begin with. And at the end of the episode, we're going to go over any community commentary and questions that you guys might have. And hopefully that will help you guys look at a bunch of things that are going out in the market right now that you are interested in. But with that in mind, what we're going to do is we're just going to start with our big major indices as Bitcoin last night made a primary drop down to around $17,650 and put in an interesting low. So we're just gonna dive in. Let's take a look at that. We'll switch the screen over here and let's see how this goes. Okay. So currently I have Bitcoin open on the 45-minute. I'm going to switch that up to the hour. For those of you that are new to the channel, or if you're not new to the channel, you will know that we are big fans of the Wyckoff accumulation and distribution trading ranges. One of the reasons that I think it's so important to do this type of analysis, especially for the beginner investor and trader, is to make a concerted effort to really understand where you are in the markets so that you can be calm and confident about the positions that you're taking, and you can be patient enough to know when those are likely going to turn in your favor. Now, when I'm looking at these smaller time frames, it can become really confusing because there's so much quick moving data, and it's easy to become oversaturated in like an emotion, like, oh, I want it to go up. Bitcoin's going to $100,000. Everyone's been telling me Bitcoin's going to $100,000. Why is it going down again? And these smaller time frames are also often very emotionally reactive. So the other day, in our private group, we've been watching these horizontal trading ranges. And again, what's powerful about this is that as soon as the trading range kind of breaks down, you want to be out of that trade. So I was only in a long 10x Ethereum trade up until we hit around $604, and then I exited that trade. Now, very similarly, Bitcoin moved out of its trading range at almost the exact same time that Ethereum did, kind of highlighting the idea that this market is moving as a singular entity, not just the interest in Bitcoin from large-scale investors, but also the interest in Ethereum. Now, hats off. Make sure you hit that subscribe button and give us a thumbs up, because on Tuesday morning, we have our podcast with Stanny of Aave going over some of these financial Legos that are being built on the Ethereum blockchain and what that means for Bitcoin as a collateral going forward, because it's added a lot of new features to the rest of the Bitcoin ecosystem. I think it's extremely valuable. So with that in mind, now that Bitcoin has this exterior financial transaction rails like Ethereum, they're moving together, and I think it's important to recognize that. So this primary breakdown outside of the bottom of the trading range here on the 1 hour chart was an indication that, and I went short on Ethereum, which is actually around 589 here, and I got stopped quickly out when it jumped up. But either way, when you're looking at Bitcoin and Ethereum, they're almost identical. So this direct close below the trading range here, this type of breakdown is important, because right now what we know is happening is we're in a bull market. So again, for those of you that are new to the channel, one of the things that we like to do is always kind of go back out to the daily and really make an effort to remember that even though we like to look at the 1 hour to kind of find out of a place of positioning, especially in a bull market, because there's so much opportunity at hand here, it's really to gain a confidence in that larger market cycle that's going on. So in 2017, we saw a buying climax, a selling climax down in January of 2019, and then this continual reaccumulation process that lasted approximately 700 days between January 2019 and where we are here in December, January 2020. Now, this primary explosive move outside of this horizontal trading range that we are looking at is known as a sign of strength, or here circled as the SOS. This primary sign of strength indicates two very, very important things. The first, which is the noticeable one, which is that we've broken out of the trading range and all the big investors are paying attention. This breakout of the trading range, almost every fundamental hedge fund manager from top to bottom should recognize. The original creator of the Wyckoff accumulation area, and a lot of this is all the way back from the 1900s and still works today because human nature hasn't changed. So one of the really fun parts about this conjecture is before we even broke out of this trading range, when we were back down here at around $11,000, $10,000, we had speculated that we'd go up to 16,500, 17,500 before returning back down to 13,000. We made that assumption way back here at $11,000 to $10,000. So this is the primary trading range that broke us out of that here. It was a nice rising gradient bottom through the horizontal trading range, and as soon as you had this backup phase here, which I've just circled in green, you saw again this massive explosion out. This sign of strength, the second most important part, it shows how much momentum it takes to get it how far. Now, we could go a little higher here, and that's kind of one of the interesting parts about this, is that we could see a quick spike finalizing this sign of strength upwards of maybe $20,000 to $22,000. Now, since we hit that high of Ethereum at 604, I've remained out of my position, at least in leverage. So again, I want to make this blatantly clear, and I will repeat it on every one of my live streams so people don't get me confused. We are in a bull market, and if you're acquiring spot, any of these prices are still technically considered accumulation. When you hear of Michael Saylor or some of the big mutual funds, I think one that just joined today, a Whole Life Mutual, they've been around for over 100 years, adding Bitcoin to their portfolio. These guys know that they're still in accumulation, so anywhere between 12 to 13,000 and the $19,000 price tag we have today is effectively low in comparison with where we're going. Now for us as smaller fish and dolphins, what we want to do is really use the opportunity in the market here to take advantage of the momentum when things start to settle in. So this time of year, categorically to some degree or another, is not bearish, but it's going to provide us a new type of trading range. So I originally suspect that we would go down to $13,500, maybe even as low as $12,500 to touch the top of this trading range again, which I'm circling in green now. We have yet to see that. Right. So one of the other conjectures I've been making is, are we in that smaller reaccumulation range? So what we want to do always when we're trading and investing, especially in trading, is look for these extremely opportune moments to take advantage of the markets by basically creating our long positions in some of the most, I guess, beneficial spots as possible, right? So let's look at this right now, and let's kind of forget how high or how low Bitcoin could go and just make a trading range assumption. We'll do the same thing with Ethereum. So when you see this first change of character, this is this here, this first time we see a drop that's significantly lower than all the upside. Like, so you had up, 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 and then your first big down. This first big down is the primary change of character, and that usually starts the formation of the trading range. The second point that's really important here was this dramatic volume signal come in that tested this supply. So this is known as your first supply test on this bullish rally, effectively. Again, here highlighted by the volume that's coming in and the downside to the trading range. Now this second area here, we've seen a subtle blip in again here in the blue. I'll zoom in a little bit so it's a bit more visible. But here you can see the blue, which I've circled in green. Caused a very subtle move upwards. So this is what we're looking for when we're studying ideas of result and effort. So there was a lot of effort in terms of volume that went in here that caused very little reaction. Whereas in the past, if you look at other primary indicators of this same type of volume spike, you were seeing noticeable movements upwards. Some of them were significant, like this one here. You can see your price spread was significant in comparison with this, which is almost not even measurable in comparison, and a similar volume spread. So this lack of result over effort usually indicates the start of the bearish trend. Now what's interesting here in a lot of retail traders, and well, a lot of people in general, probably even big traders that are big funds, they probably don't recognize that once the buying kind of slows down, what they let the price do is react into the hands of the retail market. So a lot of the downside doesn't come from the fact that anyone's selling. It comes from the fact that no one else is buying up that high. So the primary market drivers drive the price up, they get it to go up that high, and then they start selling small amounts to see how much the retail sector can actually chew up. Because again, their goal here is to make money basically off you failing to some degree or another. That's effectively how the retail markets get played. They're usually at the wrong end of the stick here. So what we try to do is make sure you're well educated enough to react properly. So the trading range itself actually provides a really unique potential. Now, if you're new to trading and you're new to investing, one of the best things you can do is just always keep buying and not really worry about price too much. Like if you're a new investor, you haven't been here for very long, you're like, oh, what's the best price I should buy in? You shouldn't even think about the price for an asset as powerful as Bitcoin. You should just think about like a weekly or a monthly entry, whatever fits your book that doesn't make you lose sleep overnight. And you should be consistent with that for the rest of your life. If you do that, you will ultimately be very successful in building a portfolio. But for those of us who like this, these rides, especially the potential momentum that's coming out of these trading ranges offer the opportunity to enter at the bottom of the trading range and then exit at the top, knowing that we might go higher. Now, right now, we don't have a clear indication of where this trend is going. We actually only have the primary beginning portion of this trend line available. So one of the fun ideas here is we can make a speculation about what the trend might do. So let's say it goes like this, and we've gone over this a few times, and it forms a horizontal trading range. We get a spike down to like 15,000, breaks back above what's known as the creek here, which is effectively a slice of your moving averages, which we could show here very quickly with our bear claw. So this idea here, this kind of 9 ideas that would come down, this purple one here, this would effectively act as the creek. And what's interesting about this is we don't know what the market's going to do yet. Again, remembering we could suspect that we actually we could suspect that we go up higher, but at the same point, because of this initial change of character, what we want to do is really watch this trading range. If we start to come up here, we produce an LPSY, and then more importantly, we close below the trading range, below 17,000 and below $18,200, this likely will signal at that downtrend to around 13,000. There's another way to look at this, very similar reaction in the sentiment, and it's not a horizontal trading range, but it's a falling one. And I want to kind of use Ethereum for the example as that, as we had been watching it the other day with our private group. So here, actually I did this in the live stream yesterday too. So for those of you that followed yesterday's live stream, thank you. I like these live streams. I hope you guys are enjoying the consistency of pretty much every day. YouTube tells me that Friday at the best time would be 3 p.m. So that's what we're doing. We're live today, Friday at 3 p.m. So this falling trading range is often another way to look at these horizontal trading ranges. Now, one of the reasons why I went short the other day is because you always want to make sure you're following a horizontal trading range, even if it's a falling trading range. I hope this kind of makes sense, guys, because I know it's a lot of data for those of you that are new to trading and investing. And for those of you that are new to investing, you're like, oh, why do I need to know about primary entries if my only goal is to buy every day? You should think 10 years out into the future and how valuable it is to know when you are in a market accumulation or distribution. Because one of the things retail traders almost often always do is buy at the wrong time when they're in a market hype cycle instead of when they're in a market depressed cycle. And what you want to do is look for depressed, undervalued assets, not overhyped, overextended assets. Now, luckily, we're in the early stages in the beginning of a bull market, so we don't have to worry about that depressed state. These are still all like deprecated in terms of price to where it could possibly go in the hundreds of thousands of dollars. And now we've been vindicated, because when we were saying that in 2017 that Bitcoin could go to $100,000, we're just some crazy, who the hell am I? I'm some crazy kid that just happened to buy some Bitcoin when I was younger. Like, yeah, lucky me, right? But now that we have all these bigger investors, these bigger traders here, people that have almost even a lifetime of experience over me, I'm like a youngin' basically, we're being vindicated in our original assertions of how valuable something like a scarce digital asset could be in a future where the economy has gone almost entirely digital. So this horizontal trading range on this small time frame, although it's not as sexy as a year-long accumulation range, which we've seen for both Bitcoin and Ethereum, it does represent the opportunity to learn. So if you are an investor and you're thinking to yourself, well, why do I need to use this? It's because for the next 10 to 20 years, this information will be super valuable for you to know, because you can just glance at the daily markets and you can figure out where we are in a market cycle, and you can use that to your advantage. It's a highly lucrative process to know where you are in the market. And many times I say it's actually better to know where you are in the market than be in the market at all. But again, at this point, we've gone over the fact that Bitcoin is now considered a valuable digital asset. It's not just for crazy people that live in the side of the jungle mountain anymore. It's for the world's biggest investors. So this close here that we saw with Ethereum below the trading range represents the first part of the bearish sentiment across the horizontal aspect of this trading range. Now, again, one of the things here that I wanted to highlight was the potential for these falling kind of trading ranges as well, because they do follow this perfect horizontal path, just not on a horizontal time frame. They're moving downwards, and these are called descending channels. Now, often this is where we thought the spike would be. So yesterday we were looking at a very real potential of jumping up back above 597 and continuing further. If we cannot get above the top of this trading range at what effectively sits at 572 for Ethereum, I believe Bitcoin will follow this same track as Ethereum as well. I believe if Ethereum can't get above 572, Bitcoin's not going higher than 19,000. A lot of the Bitcoin maxis are like, oh, they're nothing to do with each other. Yeah, well, I think you're wrong, but who knows? We'll find out. Let's place our bets. So for me, I've been out of Ethereum entirely at approximately 604. Now I do sit on my long-term investment account in Ethereum, which is different. My goal was to have enough to try to stake 2 validators, so pretty close. Now the next part of this is from the trading side, what do I want to do? Now, ultimately, the only reason I opened a short here at 598, approximately where the POC line is driving through, which is known as your point of control, or where the most volume of buying and selling has taken place within this entire trading range, the visible range that we can see, was because I figured we were quite bearish. That we were getting all this positive news. The world's biggest investors, everybody's buying Bitcoin. PayPal's Bitcoin. Everybody Bitcoin. And what do we see? We can't break above the $20,000 mark. We're seeing a stagnation in the price movement. And after all of that positive news, we had no price reaction. And that's a very clear sentiment that we're getting near the top. A lot of hype, very little price reaction. A lot of positive news, no price reaction. So there's oftentimes when we can use the psychology of the market without even needing to look at the charts to give us those clear indications of, are we near an intermediate top? Now, again, I've said this a few times already in this episode. We're going to maybe hundreds of thousands of dollars in Bitcoin. So anywhere between $11,000 and $20,000 is still considered a deprecated price in terms of what the potential is. But what we want to do as a trader is find these prime opportunities. Now, I'll go over one of these opportunities as for everyone in the private den will remember this. So back here, when we were in October, we were following this horizontal trading range for Ethereum, this one that I have highlighted in pink. In the private group, we sent an email out here that said, hey, here's the first SOS out of the box. And then we sent out another private email again here when I said, hey guys, I'm now in my trade between 380 and 404. Now, I took this as a 10x trade that approximately from here to here. Now, I didn't get as much out of it as I wanted because I was acting like a little baby, and I closed out part of my trade here at 473 thinking we might get a lower retrace. We didn't, obviously, but because of that, I didn't do as awesome as I wanted. That could have been a $100,000 trade for me, and I only ended up with like $15,000 to $20,000 in positive revenue out of it. It was again almost close enough to just under that Ethereum to a validator for Ethereum mark, which is pretty freaking good. But the point of this, what I wanted to highlight, is the potential of opportunity here. Because I knew this trading range was coming, I knew I was very limited to my potential on the downside when I made my entries here at around 380 to 404. So I set my stop loss. and I entered a very beautiful trade. I could have just walked away. This is where I screwed up. I actually screwed up by being a little bit more too nurturing, like over-parenting my trade, basically. I shouldn't have even looked at it. I could have walked away and effectively had done better, but I didn't. I closed out part of it in this horizontal, this rising part of the trading range here, which is it was just silly of me. It was my own silly mistake. But the point of this is when we start to recognize the potential of these trading ranges, where we are in Ethereum right now, where we are in Bitcoin right now, is the early start of this trading range. So I'll try to cut off the data and we can like approximate, right? So we saw this first change of character downwards here after the Bitcoin price run up, same with Ethereum, and we've seen this stumbling around in the trading range. Now currently the downside is we've closed below that trading range. Now we've gone over that we can see spikes below the bottom before initially breaking out, but we want to wait for those larger clear indicators of a market sentiment like this one. As soon as we broke above this box, private email went out twice within less than a week. What was this? Yeah, approximately 13 days. I thought it was less than that, but it just was so exciting. I guess it must have felt like less days than that. But this was the perfect entry. This area here was basically a flawless entry. My exits were the ones where I screwed up because there was only a 5 to 6% gap, so you easily could have sat on a 10x trade if you just bought like a maniac. I waited into this trade between 380 and 404 on my way out of the box, which was quite nice. So what we want to do is take that same standpoint and recognize the potential for the longer frames that are going to be breaking out. Now again, I've gone over this once or twice before. It's this rising megaphone idea out of the end of accumulation, and what this represents is basically SOS LPS, SOS LPS, SOS LPS. So here you can see to get to the top of the megaphone at around 720, and we've gone over a video yesterday why that's an important area. I'll briefly look at it again just to make the same kind of market assertion. But you can often find aligning signals in a market that don't just confirm your bias, but actually give you more data. So right now we're looking at the entire year-long accumulation range for Ethereum. And what I want to do here is I'm going to go over to my left-hand side. I'm going to grab my Fibonacci retracement tool, and I'm going to draw from the top of the trading range to the bottom of the spring of the trading range. And what's important here is, let's see, make sure that's drawn on right. Boom, right to the bottom. Okay. What's important here are some of the next clear indicators of our price targets. The first one was the 1618, which we've bounced off here at the top of the bottom of the trading range for Ethereum. But the second one is the 2618, and this is this area up near 720 to 760, approximately right here, which I think could be the final part of this SOS, because this would represent again this kind of larger growing megaphone that we've been seeing before we come back down and test 560, 570 before we get like a ridiculously powerful bull market. So these are the final moments, ladies and gentlemen. These are the final moments to be able to position yourself for the rest of this bull market. And if you know what you're doing, if you like playing with exotics, even if you don't know what you're doing, being able to understand where you are in the market here can equal massive potential. Now, I'll give an example of this because in 2017, we'll go over to Bitcoin and we'll look at this one because I remember this moment very clearly. For anyone that is friends with me and who was living in Costa Rica at this time in 2017, when Bitcoin was approximately $400 to $800, I started screaming at people. Now, what's fun here is this is actually a great moment for me because this will go over kind of the birth of the Arcane Bear, but I want to talk about something conceptual here. This moment, when we went from around $700 to $800, when we broke, from $700 to $800, when we broke the top of the trading range, this screamed to me that we are going into a bull market. And this is actually effectively when I started the Arcane Bear channel. I started the Arcane Bear channel right when we started to break out here because like, oh my God, this is going to be fun. Now, what we can also, again, we'll make some conjecture here, but what we're looking at is a very similar kind of rising megaphone breakout here, where you see something, let's see, like this and like this. So here you see the 1, the 2, the 3, the 4, the 5, the 6, the 7, and then this boom. After that 7 moment broke out, it was nothing but upside for the trade effectively. So right now we're still in the early stages of accumulation, and these potential horizontal trading ranges, which again, we're looking at 2017, we're making a past comparison to make a future assessment. Now, one of the things that was really funny is that I was quite new to trading. I did recognize the importance of owning Bitcoin, because I own, this is the funny part of the story, is when Bitcoin got to around $400 to $600, I started getting crazy. I was like, oh my God, what should I buy or what should I sell? Like, I sold my motorcycle. I was like, maybe I should sell my drum kit. I'm like, what else can I sell? I sold my gold bars, whatever it was, and I bought more Bitcoin while I was overseas. So I've anyways, the point of this is, I didn't have to sell all my stuff. I could have used a margin at that point and basically borrowed 3 times more than I had to make a 3x trade. That's effectively the easiest way to look at leverage futures and margin trading, is you're basically taking out a temporary loan, which you pay for in fees, whether it's interest on the loan via margin or it's on the futures contract perpetual fee that you pay for holding that. Sometimes you actually get paid for holding that depending on which way the market is directed. So because I didn't know a whole lot about using futures at that point, I knew about using options, but none of those things existed in the Bitcoin market. I tried selling all my stuff and to get more Bitcoin. Whereas nowadays, there's no need for that. There's no need to get crazy. There's no need to sell motorbikes or nonsense like this. I can continue to maintain my original asset allocation, and I can acquire more by using futures and leverage. So one of the things I wanted to point out here again is, for those of you that have spent a few years in the markets, you've been playing around, this is the prime opportunity to try using leverage. Now, I don't want to digress too much, because leverage can be dangerous. So more importantly, go and lose $10 by making a leverage trade, right? That's the best way to learn, is to put some skin in the game, see how it works, and see how quickly you lose that $20, right? Because remember, $20 at 20x, it's like $400 worth of Bitcoin. You can get you can get almost one Ethereum if you go in at $20 at like 25x. You'll get one Ethereum for that, basically, right? And every time Ethereum goes up or down in price, you will make the difference in that price. Now, if it goes down, I think it'll only need to go 5%-ish at around 20 to 25x for you to completely lose your $20, but you only risked $20. Right? So the educational experience of putting that $20 on the line and having a whole Ethereum because of that $20 is worth way more than the $20 itself. So if you have never used leverage, if you have never used margin, go lose $20, because that lesson is invaluable to you. And if you are smart, and if you're well-timed, and you're interested in using these things, you don't have to go and try to sell every asset you have to get further into the markets. You can make these well-timed, well-positioned entries based off the market sentiments and these trading ranges. Again, the previous entry where it was the most explosive was down here between 10,000 and 11,000, where we were watching this primary trading range. And at that same time, this is when this secondary trading range of Ethereum was forming as well. So I'm going to first off, thank you guys. I want to give a shout out to BlockFi. We're going to have our regular kind of, we're working on an asset for BlockFi that way every time I do these videos, I don't have to redo the same thing. We're hiring a new editor to help with this stuff. But BlockFi is one of our current partners. So every time you guys go and sign up and you deposit with them, you can earn interest on all of your cryptocurrency assets as well as your stable coins. But not only that, the money that we get from BlockFi ends up being put on Kiva. So the money that we get in our marketing budget from BlockFi goes to helping fund underbanked entrepreneurs. So the more of you guys that sign up on BlockFi and earn interest in cryptocurrency rates there, we have more money to lend out to entrepreneurs in rural places like Nicaragua or Rwanda or Uganda, etc. This is a really exciting partnership. I hope you guys do go and join them. You can blockfi.com/Arcane Bear or arcanebear.com/BlockFi. Both of those links will work. And I'm really excited about this new credit card. So if you guys haven't yet and you are an American citizen, go sign up for this credit card. I deeply wish, now this is the only time I wish I was American, because I hate a bunch of the other things like, oh, you got to pay your global taxes, whereas the Canadian, if I'm like, for instance, I own a beverage company here in Costa Rica, I don't have to pay those taxes in Canada because I'm paying them in Costa Rica, and why would I pay taxes to a government out of a different country when I don't operate that business in another country? Whereas you have to do that in the United States. But the fact that you now, as a United States citizen, can have a BlockFi Visa and you get rewarded in Bitcoin for spending through your Visa, I'm jealous about that part. Anyways, go support our sponsor and our partner, BlockFi. We're really excited about the products that they are providing here. And again, every time you guys go and join BlockFi, it helps us continue our adventure into helping the underbanked and the underserved, a flag that I believe deserves to fly in this sector, regardless of how many people are just focused on numbers go up good, numbers go down bad. Okay, Krug says it's time in my mind to answer some of your guys' questions, so we're going to take the time to do that now. If you guys have any thoughts or questions, this is the moment to do so. So thank you all for joining us and making it this far in the episode. Let's take a look at what everyone has to say today. What's up to you? Thank you for all your info. Tyson says, thank you, Tyson, for the support. I love being able to share this stuff. I love being able to go live. I think this is so much fun. This is such a great opportunity for me. I love talking. So this is great. So I appreciate the ability to be able to share. Let's see. CZKO says, do you use Bcash symbol on purpose? I didn't use the Bcash symbol anywhere. I don't know what you're talking about there. I don't even think Bcash deserves a symbol. It's just another fork of Bitcoin. There's a bunch of them. They should have called it something else. At least have the courtesy to be as nice as Digibyte or Litecoin and actually call it something different instead of trying to rip off the brand that you obviously didn't deserve in the first place. What the hell was that guy's name? Stupid right. Craig Wrong. That's who it was. What a schmam. What a schmam. Okay. Next thing. Thought that was green. Okay, I'm not sure. I see green sometimes, but it always looks slanted back instead of forward. Oh yeah, Bcash. I see. Yeah, the Bcash logo is green. Another thing, maybe end of year major minor sellout. Yeah, again, guys, what we're looking here is the backup phase to really kind of we're looking for that backup phase. If it comes down to $13,000, fucking hallelujah, more times to be able to go long with a equal upside. But right now, we know the primary change of character took place, and even though we may go up to 20,000, that backup phase will come, and it will show us a new trading range. So being patient for that, ultimately, for building the rest of your exotic, that's what I'm going to be doing. Being patient for those exotics is extremely important. Topped out epic dump this weekend. Yeah, we've concerted that we would take a backup phase down to $13,000 long before we got up this high. So I'm actually pretty impressed with how good we've been. I don't try to predict the markets. We just make forward-leaning sentiments based off the trading ranges that are visible to us, because there's only two options. It's going to go up, or it's going to go down. So if it goes up out of the trading range, how high is it going to go? If it goes down below the trading range, how low is it going to go? It seems weird, right? But it's kind of simple. Only two options. So we've stand by that concerted effort towards 13,000 unless the trading range changes and does something different. As soon as it does something different, you'll see a live stream notification from me. So be sure to hit that every time we go live notification bell beside your subscribe thing. That way, because I'm going to start doing these live videos pretty much every day, guys, pretty much every day, aside from content calendar, our podcast, our educational videos, and maybe our deep dive into DeFi type of sentiment analysis as well, which is a little bit, it's going to be aimed at venture capital, but anyways, let's see, take a few more look at your guys' questions. Love the new stage. Thanks, guys. I really appreciate this. This new set is a lot of fun. It was fun building it. We're not done yet. As you can see, like, look at the gray here. This gray. This is still like I haven't even finished cleaning the grout fully off yet. You could probably see the dirtiness on my fingers or whatever. Anyways, the point of this is a lot of fun. I love this. I love this. I think this is fantastic. So thank you guys for appreciating the new podcast center. It was a lot of fun to build. Spent a few days putting up this nice kind of like faded wood tiling. Okay, next sentiment. I love helping jump through your guys' questions. The backdrop. looking deep into the dark Costa Rican grotto. Yes, so for those of you that don't know, I live in Costa Rica, and yeah, it's beautiful out here. Currently, actually just started raining, and we'll end the episode by looking outside. So I see a few of you guys are asking questions about charts, so we will dive in. We'll take a look at Link, and we'll maybe take a look at a few other thoughts and questions here. Crypto Juggle says, hey Tio, can you look at Haka chart? I think it's a very clean textbook Wyckoff accumulation. I've never heard of this Haka. H-A-K-K-A, Haka. Oh, it's only to ETH and wrapped ETH and Maker. I'm a little hesitant because of the illiquidity of a market like that. You know, I want to, this is a great time to kind of make a comment about something. Let's go over and we'll bring the charts up to do that actually. So one of the reasons why I like Ethereum and Bitcoin is because these are very liquid markets. They have hundreds of billions of dollars in them. And I'm like a little fish no matter, even if I try to move $100,000 trade in and out of the market, it's like, market doesn't give a shit. It's only 100 grand, doesn't care at all. I like that. Whereas with the Haka idea, if I go look at it and it's like a X market cap and I move the market cap by spending 5 or 10 grand, then it's like I don't want to play in those waters because I'm too big of. There's another way to quote that. It's like if you're the smartest person in the room, you're in the wrong room, and if you're the biggest fish in the pool, you might be in the wrong pool. I would rather play as a smaller dolphin in a much bigger sea and ecosystem where the whales that move around me just chew up $100,000 in Bitcoin without even thinking, because then I can effectively trade my style off here. So we'll take a look at Haka because you asked, because I want to do as much for you guys as possible during these live streams. So this is Haka. I have no idea what it is. We're only doing a fundamental here. We can see massive crazy buying climax through September. Let's just take a look at this. You saw, let's take a range here, 798%. I have no idea what that is versus wrapped Ether's price on Uniswap. And here we can see a breakout of the trading range. Yeah, very interesting. So again, I'm not going to make this trade, but what you want to look at here is a horizontal. Here you see a selling climax, an automatic rally. I'd be a little hesitant because I haven't seen that dramatic spike, which would be indicated by a volume spike in red. Hopefully somewhere here. I haven't seen that yet. Yeah, because look how little supply it took to drop this price all the way down into nothing. I'd be very weary of a trade in here, but you can see that it is in some type of accumulation. Again, in these smaller market caps, it's really hard to decipher the data that's here, but you do see a lot more volume coming in and the price reaction and almost nothing afterwards. Like the gap up to whatever 30,000, I don't even know what that is of an Ethereum. I want to call Ethereum Satoshis, but there is a gap here which you could make a move off of. But again, for me, I'm looking for much bigger, more liquid markets because it allows me to trade in and out of, say, a 6-figure position without muddying the waters anyway. If you try to do that in Haka here, you might move the whole market up to its previous highs. I'm not sure. We'd have to look at it, but I don't want to dive in too deep for that one right now. Okay, next questions, and then we'll kind of, let's see, how long are we on our episode today? Does it tell me? No, it does not. Okay, 37 minutes in. Great. We've got another 15 or 20 minutes here to kind of, so we'll calmly roll through these. Ethereum can go, so I will jackhammer you says, Ethereum can go as low as under $400 if Bitcoin goes to its lowest point if it drops. I had a dream TO hit the $1 million mark not long ago. Wonder if my dream was accurate. They usually are. That's a fun one. You know, I don't, one of the reasons why I don't talk too much about my financial situation is because of the way my mentors deal with this. Now, I'll give you an example. The first time I met my mentor, he was wearing a dirty white shirt and like dirty pants. I'll let you know this guy's worth hundreds of millions of dollars. He started multi-billion-dollar business and owns like a few other 10 to $100 million plus companies. You would never in any way, shape or form be able to tell that this guy had any money. Like my truck and his truck are almost the same truck, right? So there's this kind of separation I've seen where the people that are ultra wealthy, that have done hundreds, I'm not nowhere near that. Like, let's just be very blatantly clear. I'm nowhere near that successful. I go in and out of my phases of success over the years. I had a lot of great early success when I first started managing my business back in 2011 when I was living offshore. I was managing I was doing quite well with that. I was doing $50,000 to $60,000 a month in profit. I was like the only person working. We had some good runs back in the day, which helped stabilize my ability to consistently show up and play the game. And I think more than like, in the private group, it says making, like I say, making fuck you money. Part of it more than I think a dollar asset of like, how have you made $1 million? Because a big question is, how quickly you can spend $1 million. You take a few business or first class flights here and there, you buy a few assets there and there, and before you know it, the $1 million is gone. It's in other assets effectively. So liquid versus illiquid parts of the portfolio. I'm a huge fan of Bitcoin. Personally, all I'm doing right now is just acquiring more Bitcoin. There's no other assets I would ever want to own. Like I bought a motorbike because I love riding motorbikes. I've got beautiful girls in the back and their pink helmets and their booty shorts and shit like this. But that's like a personal thing. I think Michael Saylor said something nicely. He's like, if you don't want to float in it, flaunt in it, fuck in it, you should just be buying Bitcoin instead. I agree with this sentiment to some degree. I've owned property for almost a decade. And it's a really heavy asset. It's a burden. I'm always fixing things. But at the same point, there's a stability. Like I grow ayahuasca out here. I've got hundreds of pineapples that I planted myself. And every year I come back, I get to reap these small, very valuable rewards of fruit that are beyond a price tag to me. Now, you're like, oh, well, pineapples only cost $2. Why would you want to invest in owning the place where you grow the pineapples? Because I love watching them grow. I think you have to each individually find out what wealth means to you. And when I was younger, I had the opportunity. I was living in $10 million homes. I was driving around $100,000 sports cars with my partner. We were flying business class or first class everywhere. And it didn't make a difference for me. I mean, again, flaunting it, fucking it, or float in it kind of idea. I liked this. But the downside, I'm going to have to change my YouTube monetization settings because they don't like it when I swear. Write that down on Tio's mental note. So with this type of idea, I think more than saying how much money you make, how much freedom do you have with that instead is a much better way to look at it. I have a lot of freedom in my life. I can do whatever I want right now. And that to me is worth more than like a monetary value. Sometimes there's a big difference though. I think like if you can get over the $100 million mark, then there's a different level of kind of Q money because you could buy a $50 million yacht. Not that I would ever do anything like that, but there's a level of finance that is noticeably different than like the early stages of success. I'll leave it at that. I hope that was helpful for the question. I'd rather look like the guy with the dirty white shirt and drive a Toyota, no matter how much money I have. If you see me over flaunting it, it's because I've gone ultra materialistic. I probably haven't taken any mushrooms in like years or so, and that's not the case. I've got psychedelic mushrooms I pick from the jungle on a frequent basis in my fridge right now. Those types of things I think really help mellow out the attractiveness of material success, because if you take a bunch of psychedelics, you realize that material success is pretty much worthless in comparison with your relationship with like the rain or the water or the sunshine and how much you appreciate those things. So it's a really weird one, because for me, all my mentors that have showed me or that have made hundreds of millions of dollars, they're all those types of people. They're not people that really flaunt it or show it. They show up in dirty white t-shirts driving Toyotas, and their door, like my mentor's door, I'm pretty sure, to his house is worth more than my entire property put together. Just ridiculous. Anyways, side point. Hopefully that was a good one. Okay, great questions. You guys have some fun questions today. Okay, cool. I'm just going to keep rolling through because we got more minutes here, and you guys have some great questions. Okay, wow, lots of new questions. Okay, thanks, you guys. I'm just trying to scroll back to find out here. Okay, Brian Rodriguez. So margin trading in the U.S. recommendation. Brian Rodriguez, great question. My suggestion to you would be to go to arcanebear.com/FTX and sign up with FTX. Now, even though FTX's GUI and UX is a little bit confusing, once you find your way around it, there's a lot of really cool opportunities. So let's actually look at that. I've talked about FTX a few times. Excuse me. And there's a reason for it. FTX has done something really unique, and they provide a basket of currency potentials. So on the right side of my screen here, you can see DeFi perp, Uniswap perp, alt perp, mid perp, shit perp, and exchange perp. These are all futures perpetual contracts. Now, let's use the DeFi perp as an example because I think it's the most relevant. For those of you that haven't yet as well, go to arcanebear.com and sign up for our newsletter. We send out a free newsletter once every week. We're going to try to get, starting now, we're going to send them once every week. This week's write-up is by Baloo, and it's specifically about sector analysis, and FTX falls into this basket of sector analysis. So what we're doing is we're actually charting like Aave, Wi-Fi, Uni, I think Band, Comp are all in this basket as well. So the DeFi Perpetual Index is a way that you can find through FTX long and leverage positions in multiple forms of the DeFi space. So instead of thinking to yourself, hey, I'm smart enough to know that Aave is like the best ever, way better than any of the other ones, you can find exposure to all of them through these DeFi Perpetual swaps. I think it's a really great product. And what's really nice about the DeFi perpetuals right now is you can see this beautiful trading range is taking place. Now, larger trading range effectively. So there was a smaller one here with the spring. You can see on this descending channel, but now you can see the horizontal trading range taking place. Our primary SOS, we're forming a backup phase. We may come down as low as the POC here. But I believe if you're interested in leverage and you're an American, FTX is probably one of the best ways to go. And they provide these fun perpetual assets like DeFi or Uniswap perp. So Uniswap perp is another one that gives you access to a basket of Uniswap tokens effectively without having to pick which one you think the winner is going to be. Altcoin perpetuals is the top 50, I think, altcoins or alternative digital assets in the ecosystem as well. So you can acquire a bunch of them without having to own any of them. You just find exposure to a basket of them. So FTX has built this really cool futures perpetual contract option based off a multitude of currencies or alternative assets that they own. So this is a great question because I do think that is a unique product that I haven't seen anyone else serve yet to the ecosystem, and it's a valuable one, especially for managing portfolios and not trying to think you're smart enough to know exactly which DeFi asset is the best. You can find leverage and a basket of perpetual futures. So fun question there. Thank you for that one, Brian. Let's take a look at some more. Adam Hill says, thanks, Tio. I love your videos. Always learn more. Thanks, Adam. I appreciate that. I'm always trying to learn more with you guys as well. That's one of the most exciting parts about this is like it forces me to be like, hey, like you should be reading more books. You should be studying more because that way I can help you guys learn more too. I probably read probably read like 20 books this year, but this year is special because it's been a pandemic. Normally it's like 10, like doubled my reading at time. But I really, really like these live streams, especially because it gives me the opportunity to go on a bit of a longer winded rant. Okay, so where do you trade with margin? I currently trade on Binance, but if you're a US customer, that won't apply to you. I like Binance futures, and their margin trading is nice, although their futures is probably better, I would say. It's just easier to play around with, but the rates on the margin are much better. You get a much better rate on the trade. It's much cheaper to sit in that trade for a long period of time as well. Sometimes free. They have like no interest on some of the trades, like One and Fetch and Seller. They had months where there's no interest on the 10x trade. It was ridiculous. I think that's why we saw such a major price markup in our Fetch trade, which was almost 700% over top of Bitcoin's price while it was going up. Dan Wall says 5% of a fluctuation stop out will liquidate you well before you hit the top. Yeah, so part of the thing here, guys, with margin or futures trading, you need to be very careful with your entries. You cannot be like, oh, I'm just going to buy here with like all of my 10x and hope that it works out with no stop loss or something. You just can't do that. There's no like Valley Girl trading here. If you go in with a stop loss set, your confidence set in a direction that you are very confident the market is going to go. Otherwise, you're just wasting money, and you should be buying spot. Now, again, I did say earlier that wasting money to learn is actually a really valuable asset to you. And again, I do suggest that just use very small amounts so that you can you'll burn yourself. You'll touch the flame. You'll realize leverage is hot, and you'll know how close a 5% move is in a volatile markets for you to get it right and for it to work out properly. Okay, Robert says, Arcane Bear is simply the best. I appreciate that. I appreciate all of you guys for showing up to these episodes. It really means a lot to me. The support over the years means such a great deal because I love this stuff. Snake says, I've been trying to tell people about calculated leveraging. Sadly, YouTuber promotes tight time frames. Leveraging from 1 to 1 minute, 1 to 1 hour is dangerous because you have to sleep. Just sad. Snake, this is a great comment. I don't think a lot of people understand what leverage can be used for in a larger market sense. They think to themselves, oh great, I'm going to be able to get rich quickly. Look, I can buy X amount of an asset with only X amount of dollars. But they don't realize how tight that move is in a market like this. We've only had one gap where Bitcoin was fluctuating around 13% from the bottom to the top of the trading range, back between $10,000 and $12,000. And if you were in a 10x position at the wrong spot of that trading range, it could have liquidated you. But if you got in at the bottom of that trading range, you were making massive gains. Those are $100,000 million types of trades. So you got to be very careful. Bakeridge says, would you put your $20 margin experiment to work? What's the platform you use? I'm Canadian. Bakeridge, I use Binance. FTX is great though. I've used Binance for a while. I've got the BNB token for discounted fees, etc. If you go to arcanebear.com/Binance, you use our affiliate link and we make money every time you guys trade, and then we can hire more people. And Lindley, I used to actually have no affiliate links on here for years. That was stupid of me. But now that we have an administrator, people helping me out, realize that I should be turning this into a business so we can hire more people, so we can bring you more information. We actually have referral links. So if you haven't signed up for Binance, go do that too. But I use Binance, and you can look again, use that $20 knowing you're going to lose it. Like, don't go think I'm going to make like money with my $20. No, you're going to lose it, but you're going to learn, you're going to gain a valuable lesson that is worth way more than the $20. So hopefully that's helped. Okay. Chet Wanderlust says, thank you for your work. How do you decide on your stops? Okay, let's take a look at that one. Okay, so let's Chet is asking about my stop losses. So let's go over the trade where I was stopped out previously with Ethereum. I went short on Ethereum, something I don't suggest you ever do, which is going short in a bull market. I always tell you guys what to do, and sometimes I do the opposite thing. Hey, don't trade it. Don't go short in a bull market. What does he do? He goes short in a bull market. But I'll show you why. I'll show you where my stop was, and hopefully that will help answer your question of how I decide my stops. Let's go to Ethereum versus BUSD, right? We were looking at these trading ranges. So here you can see where I made my trade. So okay, so what I'm looking at right now is just the visible range for the top here at around 620. So the other day, and I was probably a little bit too tight on my stop, but I'll show you what it was. It was too early. So right here, this spike down in Ethereum, when we came back over here at around 580, 590, this is where I went short. And I was hoping to catch this down, right? Effectively, right? So I was aiming at a down potential of around 10% or $53, which is huge. It's at a 10x play, that's 100%. So if you're in at 20%, that's a 200% move. So if you put $100 in and it dropped like this, and I would have been in this position, that would have effectively made $200 from that $100 that I risked in at only a 10% move approximately. So my stop loss, which is really the point of the question of this one, I set at 604. Now, I thought we were actually going to turn down sooner. I thought that we were going down here. I thought we were going down faster. And we had within about 4 or 5 hours, we saw this spike up to around 605. Where is it here? Boom. 605. So this represented a 2.5% loss. It was at 605 and I closed it at 604. So I was approximately around 2%, which was at 20x because when I'm playing with shorts here, I'm mostly just practice again for when we go way high. When we get to ridiculously high levels of Bitcoin and Ethereum, that's when shorting is like, oh yeah, well we should be having shorts or options. on futures prices that are way lower than we are now. But for now, it's mostly just a practice. Okay, I see this distributive move coming in. I want to capture that downside. Let's make a bet. Let's test my theory. And I put the stop loss in at approximately 2% at around 604. Yeah, 2.2% effectively. So I lost. I ended up losing. What was that? 2% is around 20% of the trade. So I didn't put much in there. Again, it was, I think we only had like $500. So I think it was about $180 loss. I'd have to double check at the exact numbers because I didn't look at the trade history afterwards. That's all for my accountant to deal with. Thank God. I hate all that annoying stuff. But anyways, thank God for accountants, right? And if you guys need a good accountant too, actually quick shout out to my accountant. Go to arcanebear.com and under the resources, you can find tax attorney and tax accountant. And you can find Drew from Archer Taxes. He's wonderful. He works with both Canadians and Americans or United States citizens, and he's on your side, which is very hard to find. Someone that knows the crypto tax law and is also looking out for your best interests as well. So go check out Drew. Tell him the Arcane Bear sent you. That's a total side point, but yeah, I got stopped out here as a 2%. I was risking 2% on the downside to hopefully get around 10% to the upside on the downside. So silly. Okay, next question. I love all these. Let's see. We're about 45 minutes in. Great. So we'll keep going. Snake says, I found out that most wrecked people just don't understand how the market moves and think Bitcoin can go to zero every day. Yeah, we're in a bull market. This is a fantastic find. Which platform do you try is best to try out for exotic products? Really depends on where you are. I'll stick with FTX or Binance are great. I'm not a fan of Bybit, but people seem to shill it quite a bit. We do have referral links for Bybit, but I'm hesitant to say it's any good because I haven't tried it. So I don't know. Maybe I should go try it. But from what I've seen, they've got a few little glitches. I do think Binance and FTX are my favorites. And I do suspect that we will see a decentralized version of these indexes come up soon. Empress J says, new crypto investor. Welcome. Welcome, Empress. Can I use Coinbase to accumulate Bitcoin? Yes, you can. But if you're new to this sector, and you're buying Bitcoin, you should go out and you should be buying things like this. Ledgers or Trezors. Look how many of these things I have over the years. It's just as ridiculous. You should own something like this and not keep all of your assets in Coinbase because it is a third-party exchange, and because of that, it's risky. Now there are other ways, like you have Gemini custodial relationships, which are actually can be quite productive, especially if you're a larger scale investor. If you're just a new investor, get yourself a hardware wallet. And yes, you can accumulate on Coinbase. And again, just make weekly, monthly entries and sign up for that BlockFi card too, because if you're already spending money, which I assume you are to live your life, you will get rewarded in Bitcoin. And that is just such a great product and feature. Okay, next questions. Happy for you, man, to be happy. Thank you, Barry. It's having a great time out here. I had a great morning. This beautiful woman called me. She's like, hey, what are you doing right now? You should come over. I'm like, hey, I'm over. I'm out. I'll be over in 5 minutes. Okay, hit that like button. Let's ride on two wheels. Says, thank you guys for the support. Really makes a difference when you like, share, and comment on our videos. Right now, it's kind of one of my goals to get over 5,000 video views per video again. So if you guys can, over the next little while, as we start to go into this new market cycle, really shill the Arcane Bear to your friends and family. If you want to join our private newsletter as well, go ahead and do that. Remember that there's no risk, because if you sign up and you're not happy, we'll give you a refund, no questions asked. So check out arcanebear.com/private if you want to join our group as well. And again, no risk. If you sign up, you're not happy, we'll give you the money back. It's designed to only invite people that are interested in sticking around. If you don't think the value is there, well, then we'll give you your money back. It's super easy. So would XRP considered be relatively liquid still? Yes, XRP is a big market. It is relatively liquid. Again, diversification, if you look at something like Grayscale, I'm sure they have a small amount of XRP, but it's mostly Bitcoin and Ethereum, and they're increasing their Ethereum area for sure. Ethereum is extremely undervalued, I think. I don't think most people recognize what Ethereum brings to the table, because it makes Bitcoin more valuable too. Like Ethereum literally makes Bitcoin more valuable. I like that. So I'm just going to take a look at a few more of your guys' thoughts and questions here. Top chat. Let's see. How do I pop this chat out so I can view it a little more easily? Perfect. There we go. Okay. Empress J says, first time watcher, you're so dope. Thank you, Empress. I really appreciate that. Welcome to the Bear family. Great to have you here with us. Kongan says, yo, I just tuned in. You look pretty damn cool. So will Bitcoin go to 1 million within the next 10 years? Fun question. Thank you for the compliment. Look, when Bitcoin was at $90 and I was like, wow, we're going to like $10,000. I was just some lunatic. When Bitcoin was at $10,000 and we said it was going to $100,000, it was still some lunatic. Now that Bitcoin's at 20 grand, thinking about will it go to 100,000 or $1 million, I don't think we'll sound like a lunatic to say, yeah, I do believe that the way this asset works is very likely it could go that high, especially if you factor in the realization that the US dollar isn't really worth anything specifically. So if we're measuring it in US dollars, what type of degradation of the US dollar would it need for it to be worth 1 million Bitcoin? I'll give you an example here. If you bought a house in San Francisco in like 1950, it might have cost you like $50,000 to $60,000, but that same house might be worth like $1 million now. This is a level of consumer product inflation. So to some degree or another, we might not be witnessing Bitcoin's price rise as much as we are really watching the degradation of the dollar and the fiat currency system, which again is designed to inflate. It's not a money. I don't know why people got confused about currency being money. Currency is not fucking money. They call it currency for a reason. It's supposed to be inflated because we have new people being born and we need more liquidity for all the wealth that's being generated through new products and new services. It's not and never was a money. You don't want to hold on to it. It's designed to do other things like acquire assets or build new businesses effectively. Currency is designed to be inflated. They tell you they're going to inflate it. It's always that's such a weird one. I always felt weird about that one. Okay, next thought, and we'll leave it off here because we're close to the hour mark. Any thoughts on NEO? No one talks about it anymore. 2 people asking about NEO. Okay, 2 people in a row asking about NEO. We will go ahead and we'll take a look at NEO here really quickly. Again, guys, I try to keep my trading and my investing really simple, right? I try to keep it to just a few things. Now, I have been breaking out of that a little bit, and I've been looking more and more at the DeFi sector. I think the DeFi sector is super sexy. Again, shout out to Yanni from Aave from this morning on being on the podcast. I had a really great time with him. He's such a wonderful character, and the DeFi sector, I think, is very undervalued right now. At these prices, I'm going to be patient I'm building slowly into positions like Avalanche, Aave, UFI, Uni, and Wi-Fi. Jesus Christ, what a mouth twister of names for some of these things. Sushi swaps, guys. Okay, so NEO. We're going to look at NEO versus Tether just for fun. Why did that not show up? One sec here while we load NEO, ladies and gentlemen. This is all for you guys. Try to make as many concerted efforts to go over what you guys are interested in as possible. Okay, so we're going to go over NEO versus Bitcoin. Now, this is fun. Now, lately, I've been charting more and more versus the US dollar, and we'll kind of go over that. I went over that in the podcast with Stanny from Aave, so we'll maybe keep an eye out on that podcast that comes out on Tuesday. Okay, so here's NEO versus Bitcoin. We're gonna go out on the daily. Wow. Okay, so here's something really interesting, right? Look at this explosive move, and then this drop down. I'd be a little hesitant about NEO, but let's take a look at it, NEO versus US dollar. Because again, so one of the things that we went over with Stanny in the podcast was about the new risk of the Tether or the US dollar effectively being brought into these markets and what that means. Because the US dollar as a stable coin, it brings a lot of risk into these markets. So effectively, oh God, you know what's crazy to me? This is what's crazy to me. I remember buying Ant shares at it was 50 cents or something. It's at $16 now. NEO is at $16. There's not even enough data to look at that here. I want to look further. Where's going to give us more data for NEO now? Because it was so cheap when we bought it, and it was Ant shares. That was ridiculous. Let's see. Bitfinex. I want to look at Bittrex. There we go. Neo to tether on Bittrex, I think, should have the most data. It should bring us back to 2017. And it doesn't. Okay. Does it? Oh, almost. So close. So close. Anyways, here you can see only $11. This was after the massive spike up. Okay. You know, this is a hard one because fundamentally speaking, like I said, I try to make things simpler on myself. You can see that it's actually broken above the horizontal trading range. You do see a primary SOS and a backup phase. But after my experience with BAT, I become very conservative after the SOSs here. Like even with Bitcoin, this idea that we're going back down to $13,000 is not unfounded. We've been saying that since before we broke out past $10,000. When we were at $10,000, I said we'd come back down to $13,000. I still stand by that, but let's let the future tell us. So with something like Neo up here, like I would be a little concerned because as an investor, what is Neo going to do that Bitcoin Ethereum can't do? Like originally when I invested in Ant shares, I'm like, oh, this is a great idea. Like Ant shares is the Chinese version of Ethereum. I'm like, if we're going to write contracts, I don't hire a Japanese lawyer. I hire a lawyer from the jurisdiction of the country that I'm working in. So maybe you're going to have a smart contract code for different countries that are written in different languages. Like, because this Turing complete language is different. Not everyone speaks English. I was like, this is brilliant. I'll buy some Ant shares and maybe it will be like the Chinese Ethereum. And it did fantastic. That was a great trade for us back in 2017. But now, where we are now, I think the Turing complete language of Ethereum it will do enough to take over. We don't necessarily need like to have a separate code structure. I'm not sure though. Could be would be remiss to be wrong on that one. If it's important to you, guys, look, I missed Link back in 2017. I had friends knocking on my door, being like, dude, you got to check out Link. We'll get Sergey on the show. And I'm like, whatever. I don't know anything about Link. Blah blah blah. What does it do? What's an oracle? But I was being like I knew better. Like I know better. I don't know anything. So I decided to say no to Link. But look, obviously I was wrong. Very obviously, right? People that call Link a coin at this point don't recognize how wrong they were, and it shows a very deep flaw in their character as an investor to understand that the market knows something that they obviously didn't know. Anyways, side point there. But with Neo, if you have this feeling where it's like Neo's the thing I'm supposed to be, and I've got all my research and I'm doing all my things, like, then you should do that. You shouldn't let someone like my comments degrade your confidence. But in the market cycle here, looks like a lot stronger potentials out of the DeFi sector, and I would ditch Neo. And I would aim at the more lucrative, productive sector I think that's coming out of the DeFi space as it is. Okay, last few questions here before we dive off this episode. Thank you guys all for joining us today. I really, really appreciate that. It makes a big difference. I know that these live streams, we're going to be going live pretty much every chance that we get at this point. So again, I really appreciate showing up, all of you that are sticking around for this long. Soren Bachman says, remember to like the video. Yes, again, guys, one of the easiest ways for you to support us and help us grow, get us to that target of 5,000 plus video views, like a 2020 goal for us. Anytime you like, share, or comment on our video, if you've watched it and you're like, oh, I want to help Tio and the Arcane Bear, just hit loop, let that video replay on loop a few times. Yeah, mute it, do something else in the background, drive up that watch time for us. We'd really appreciate it. Share the videos, shill us to your family members, whatever you'd like to do. I really it makes a difference on the YouTube algorithms, and right now that's what we're trying to conquer, and that's one of the reasons why we're doing these live streams, is because it massively increases the watch time, because this is an hour-long stream instead of a 10-minute video talking about the same market cycle that we went over at the beginning. And now I get to really, really dive in and get to meet some of you guys through the comments. Like I recognize Robert for sure. Robert always comments. Thank you, Robert. Shout out to Robert. Let's ride on two wheels. I will jackhammer you. I've seen your guys' names here many times before. I really appreciate that. To Empress J, who's a new Bear family member, I really appreciate that. Okay, last few questions. Have you ever tried using the SafePal hardware wallet? No, it's just that simple one. What time will be the live chat tomorrow? Breaks. Live on the weekends might not be the same thing, but if it is live on the weekends, it'll be 3 p.m. So Friday, Saturday, Sunday, if I'm going live, it'll be 3 p.m. Monday, Tuesday, Wednesday, Thursday, if I'm going live, it'll be 1 p.m. Now, sometimes, like I said, we will be doing podcast days, so we might have 2 videos that come out. I think podcast days will be Tuesday, token TO tangents. God, I'm dyslexic. TO's token tangents, yeah, that's the one. On Tuesdays, those will be the podcast versions where we dive into things like Aave or Roll or some of these unique DeFi products that are coming out. We're going to do our educational Wednesdays, hopefully, where we do a video about how to buy and enter into a futures margin trade on FTX or Binance, these kinds of things. And we will do kind of our on the weekends. It's very likely like we'll end the video off here by looking outside at the jungle for all of you guys, but I want to do videos about my regular life again too, because I love that stuff. Maybe where I like review my motorcycle, or I don't know, like I like doing product reviews. Those things were fun for me. I've done it the whole time. But I'm just going to segment it now so that, you know, on Saturdays and Sundays, you don't know what you're going to get. It's like a Kinder Egg surprise. You could open it up and you could be watching a video of 3 beautiful women doing yoga while I play music. Like I have no idea what's going to happen on the weekend. So keep that in mind. Okay, next thoughts. What camera do you use? Great question. Very great question. So I have to give a shout out to Canon here for this one. I use a Canon 5D Mark IV with a prime lens 1.2 50mm lens. And for the longest time, this camera was what I used for vlogs. But now, Canon released a new EOS webcam utility where I can plug in any one of my Canon cameras, because I have more than one, directly into my computer. And just like now, we're going live with a $3,000 camera. This is amazing. Normally, you don't get that. I was using these crappy like Logitech video, these things, these 1080p. They're HD, but they look like trash comparison to this. I really like that Canon did that, especially in this time. It was a free feature. They charged nobody anything and provided hundreds of thousands of people with the ability to go live with a webcam that they maybe never owned and couldn't buy because webcams were sold out for a while. So I use a Canon 5D Mark IV. I'm a Canon fan. I actually kind of want to get my hands on a Canon EOS R, but I'll wait like a year or two till I've really like driven the out of this 5D Mark IV, because this is such a great camera. Okay, just a few more questions here. Let's see. I really love your Chet Wanderlust says, I really love your attitude and the ethos. Thank you for the calm you bring to this crazy market. If I ever come to Costa Rica, can I come share mushrooms with you? Thank you, Chet. I appreciate that. Actually, here's a fun little side thing. Okay. Let's go over this. No, okay. Yes, we are actually I've been talking about maybe doing like a mushroom conference or something like this, where it's legal to take psychedelic mushrooms in Costa Rica, and they're very abundant. There's like 50 different kinds of psilocybin mushrooms here in Costa Rica. They're very easy to find. I could go out every day and I can find probably like an ounce a day if I was really interested in doing so. But the point of this is we've been talking about maybe hosting like a psychedelic hackathon where we bring in more like CEOs, cryptocurrency based ideas, blockchain, and we start to lean into this idea of psychedelic capitalism and building products and services, like a launch house, like a hacker house. Like, I'm not really sure how we do it yet, but it's in the works to do something like this. So keep that in mind. At this moment, yes, I'm definitely open for visits where we take psychedelic mushrooms. I love it. It's one of my favorite things to do. I've been doing it since I was like 15 years old. It's why I dropped out of school. I'm like, wow, so I could go to school, or I could just sit in nature with a little bit of mushrooms and learn like 1,000 times more about life than I ever would in school. Okay, some of the last questions here, guys. Again, thank you all for joining us. Robert says, join the Bear Den and watch all my videos. Our private group is like a mastermind. So we have a bunch of other traders and investors that are constantly helping one another, and we're always working to produce more content that really help educate everyone in the group about these trading ranges, because it's such a valuable sentiment. Like once you start to get comfortable with the trading ranges, it really increases your profitability in and out of the markets, because you can be patient, you can wait, you can see, oh, we're in an obvious high point, like let's wait this one out a little bit, this kind of thing. So if you're interested, again, join the private group. No risk. It's we'll give anyone a refund that's not happy with the products and services. So give it a shot if you're interested. If not, do your own thing. Okay, next idea. Awesome, great. Thanks for all the likes and love and support, guys. It's really, really great. Chet Wanderless says a retrace to $13,000 for Bitcoin seems complicated because this is the 21-week moving average right now. If we close below that, we could seriously challenge the bull market. Yes, the 21 moving averages we have talked about. Look, I want to actually go over this one again, because I've talked about this specific thing for quite some time now. For those of you that have had the pleasure or not of following me for long enough, you will remember back in 2019 when we went from $3,000 to $13,000. So many YouTubers like, oh my God, a bull market started. We're going to $20,000. Like, are we on our way? And I said very specifically on a day-to-day basis, guys, we're not touching the 21-week moving average at all. This is not a healthy bull market, and we're not going. I don't think we're going any higher because we haven't touched this 21 moving average at all. So here, and we can find this in other markets. We could go look at like 100 different indices, and clearly what you'll see is, and often you'll want to look at a log chart, especially if there's more time. Right now, we're only looking at a very small point in time, so it doesn't make too big of a difference. But here you can see the weekly log chart when that run up to 13,000, and we never want to touch this white moving. So the white line is our 21 moving average here. This one never touched it. And what you want to see is like a touch to it like this each time. If I had seen this, Jesus Christ almighty, I would have been leaning into longs like a god maniac. And again, you can see that same productive nature of this 21-week moving average test when we go back in history. So we had gone over this back in 2019, which was, guys, look how many times we touched the 21 moving average. You've got here. These are all retests going outside of the box on its way up. And again, you see that all the way up the market cycle. Boom. Pretty much here. Now, again, if we took it off log, I think you'd actually see probably a clearer touch of the 21 on the way out. Yeah, here. It's almost the same after we got past $4,000. But again, you can see this 21-week moving average is quite consistent, especially leaving the box. So we don't necessarily have to come down to touch that. Like if we look, if we go back out to where we are right now, the 21 weekly moving average is effectively right at the bottom of the trading range down here. But the 9-week moving average is up here at 15,000. We definitely want to come down to at least the 9 to touch. So $15,000 is very likely. And again, we could suspect maybe a quick move up to 20,000 before coming down to 15,000. We don't know yet. We're going to have to wait. So anyways, we'll leave it at that. Thank you guys all for joining us today. Remember to give us a thumbs up if you like this content. If you're new to the Bear family, like Empress is, remember to hit the subscribe button and make sure you click that bell with all notifications. So every time we start going live, you guys will be notified. Yeah, when I get back to Canada, I've got all these closed. Like these are actually closed. I haven't even opened these yet. Like you can see the seam around, like that's how good the camera is. You can probably almost see the seam of the edge of the plastic around this Trezor box. I've got a bunch of these we'll give away. Companies send me swag all the time. If it was easier to send stuff out of Costa Rica, I would already be doing giveaways because I seriously have like a stack of all these. I've got about 7 of my own, and then I've got around 10 that are unopened that I need to give away eventually here as well. Anyways, maybe we'll end up somewhere with a better mailing structure. Point of this is, thank you guys for all your support. It really makes a difference. Remember, the more comments you leave, everybody like this video. Let's see how many likes we can get. Like I challenge you. I dare you. I dare you to like this video. Don't do it. I dare you to like this video. Anyways, I really appreciate your guys' support. Check this out. We've got an intro and an outro. Steve with the Arcane Bear signing off for the rest of the day. I hope you guys have a fantastic weekend as we roll into and out of this Friday. Wherever you are in the world, I'm sending you my best. And actually, before I give you the outro, let's do this. I want to show you what Costa Rica looks like. It's a little gray today, but check this out. Oh. Yes, there you go. There's the Costa Rican jungle for you all. I hope you enjoy yourselves wherever you might be. Look at that. I can even like walk outside a little bit now too. These camera updates are so dope. Look at that. Look how beautiful it is out there. Thank you guys all for joining us. Steve with the Arcane Bear. I'm signing off for the rest of the day. I hope I just leave you with a little bit of jungle nonsense before I don't know what I'm doing. Here's a shot of the jungle.